Welcome to EPK Capital, where we simplify investment. Here is your daily financial report for November 11th, 2025. The last 24 hours saw a significant risk-on rally, driven by U.S. political optimism and dovish commentary from the Federal Reserve. Let's review the closing numbers from the major U.S. indices on Monday, November 10th, 2025. The S&P 500 surged 1.54% to 6,832.43. The Nasdaq Composite jumped 2.27% to 23,527.17. The Dow Jones Industrial Average also rose 0.81% to close at 47,368.63. This optimism extended globally. Europe's FTSE 100 closed at a new all-time high, rising 1.08% to 9,787.15. Now, let's analyze the drivers behind these numbers. The primary catalyst was a significant political development in Washington. Investors reacted with strong optimism to news that a deal to end the U.S. government shutdown is now within reach. Probability markets, like Polymarket, now place an 88% chance on federal funding being restored this week. This shutdown has been a major source of uncertainty, and its potential end removes a significant market headwind. However, the shutdown's impact is still felt. The Federal Reserve and market participants are operating in a data gap. This delayed critical economic reports, making it difficult to get a clear picture of the U.S. economy. We also saw direct impact on specific sectors. Airlines, including United and American Airlines, came under pressure, with both stocks falling. Beyond the shutdown, the market digested several critical political and macroeconomic statements. The most significant macro driver came from the Federal Reserve. Governor Stephen Miron suggested he would support a half-point rate cut at the December meeting. This dovishness was echoed by Governor Christopher Waller, who also supports continued easing of monetary policy. However, Governor Waller highlighted the core conflict facing the Fed: solid economic growth versus a softening labor market. Separately, Fed Vice Chair Jefferson noted AI's potential to boost productivity, which is disinflationary. But he cautioned that AI could create upward price pressure in the short term by increasing demand for skilled labor and data centers. Comments from President Trump also created significant volatility in specific sectors. The health insurance sector was the worst performing group in the S&P 500, with Centene plunging nearly 9% and Molina Healthcare falling over 7%. This followed a statement from the president indicating a desire to reduce federal funding under the Affordable Care Act. In a separate development, the U.S. is in talks with Switzerland to significantly reduce tariffs on Swiss exports from 39% down to 15%. While official data is paused, private data is painting a confusing picture. The University of Michigan's Consumer Sentiment Survey fell to 50.3, a near-record low, citing inflation and layoff fears. On the other hand, the National Retail Federation reported that consumer spending remains aggressive. This suggests a disconnect where consumers feel terrible about the economy, but their actions have not yet changed. In Asia, Japan's Eco Watchers survey for October came in far more positive than expected, suggesting improvement in their domestic economy. In the commodities market, the dovish Fed commentary and shutdown uncertainty was a boon for precious metals. Gold futures surged nearly 3% to $4,120 per ounce. West Texas Intermediate crude oil rose 0.6% to $60.10 per barrel. The U.S. market rally was not uniform. It was a clear rebound in the sectors that had been beaten down the most. AI and tech, including Nvidia jumping 6% and Palantir surging nearly 9%, led the charge. Semiconductors saw a broad rebound, with Micron gaining 6.5% and AMD rising 4.5%. Data storage companies Western Digital and Seagate were up 7% and 5.2%, respectively, following bullish analyst price target boosts. In M&A and earnings, Tyson Foods reported complex fourth-quarter earnings, with adjusted EPS of $1.15 and sales of $13.86 billion up year-over-year. In pharmaceuticals, Pfizer announced it is acquiring weight loss drug maker Metsera for approximately $10 billion. Finally, let's analyze the digital asset market. On the surface, crypto markets participated in the risk-on rally. Bitcoin is up 3.7% in the last 24 hours, trading back above $106,000. Ether is up 4.1% at $3,592. XRP was a major outperformer, jumping 11.3% to trade at $2.49. However, this price rally hides a very bearish underlying data point. Digital asset investment funds just registered a second consecutive week of massive outflows. Over $1.3 billion was pulled from these products last week, with Bitcoin-focused funds leading withdrawals at $932 million. This creates a significant divergence. Prices are rising, but institutional money is actively leaving. But the biggest news in crypto is regulatory. The CFTC is in advanced talks to authorize leveraged spot trading for Bitcoin and Ethereum. This would bring a massive, currently offshore market under US regulatory oversight and could be a game changer for institutional adoption. Following the DMM Bitcoin hack, Japan's FSA is drafting new rules to license all third-party crypto custodians. To summarize the last 24 hours, a shutdown deal, rally, a dovish Fed, and a crypto contradiction. Looking ahead to today, November 11th, the US bond market is closed for Veterans Day, which may lead to thinner trading volumes. Traders will also be watching for the release of UK employment data. That is your comprehensive market update.